Come on, 2, 3.
Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, January 22nd, 2022. It's been another great week of shows here on BRN, and we're going to take a look at some of our best segments this week. On Tuesday, we sat down to discuss investing for the long term. Let's take a look.
It's unbelievably important, and it's hard, right? Like, we see in the papers every day about the market's up 1% or 2% or it's down, and it scares people. And I'd say, at the Fool, what we've learned, and we talk about this, there's investing on one side and there's speculating on the other. And we're investors, which means we take a very long-term mindset. And there's big advantages to you as an investor if you have a long-term mindset, right? You don't get scared out of the market on the gyrations when it goes up and down. You more look forward to those, particularly the downward trends when those happen. And we know, by the way, that they do happen. There's a 10% drop in the market about every 11 months. So it's called once a year. We know it's going to go down about 20% once every 3 years or so. And then once a decade or so, we're going to see a 30 or 40% drop. And I think the long-term investors that have truly money invested that they don't need to touch for at least 5 years, they don't freak out when that happens, right? But it's not easy. And the easiest thing that we see when we look and check our stocks is the price of the movement of the stock. What we try to do, and we try to teach our members to do, is kind of disassociate yourself with the movements of the stock, focus on how well the business is doing. Has the business gone up as well? There's sometimes where a stock has gone up 100%. And I think as an analyst, the business has done better than that. So we like to add to winners and do things like that. And then there's sometimes when a stock is down 30% that we don't like to add to it because we think the business may have declined even more, right? So anyhow, I'd say if you have a long-term mindset and you're not focused exclusively on the movements and the gyrations of your stock prices and instead focus on the business, you're going to do so much better as an investor. Yeah, you really will. I like it when people get interested in investing. But there's oftentimes, and I think those are two examples with AMC and GameStop, that they get interested for the wrong reasons, right? That's in the headlines, and then it attracts a kind of a newer, younger type of investors. My oldest son is 21, and he was 20 at the time. So we had a lot of discussions around GameStop and all that kind of stuff. And you can go into the Reddit, subfolders and read about it. And there's these people making decisions. Wall Street Journal had some articles on some of those folks. And I'd say, there's a lot of things that they were probably doing that I think is interesting to people, right? You're kind of sticking it to the man. You're like making money. You're forcing these people that, shorts to kind of cover. And we know that kind of pushes up the price, but it's temporary, right? And the problem is once those stocks move up beyond what the value of the business is, and people get carried away with, I'm buying it just because it did well and power to the people, it's eventually going to change, right? You just don't know when. And so I'd say that becomes speculation at that point. And we're not fans of that. We're long-term investors. So a lot of that stuff we just kind of ignore, and we focus on the things a lot of times that aren't in the headlines. For the people at home, and I think a lot of us, at the Fool, we have many analysts here, and we are motley. So we all have different approaches. Some people are screeners, so they'll screen for different criteria of companies that they like to see, and then that'll narrow down the list from thousands of companies to maybe 50, and then they'll kind of go through those. I've never been a screener, so what I'm generally interested in, just kind of, I observe the world around me. I kind of look around, and there's some things I get interested in. And as I told a group of internal fools, we had a informal lunch last week, and I said, I wish the process was like real quick and easy, but unfortunately there's a lot of rabbit holes in research that we have to go down to understand, is this a good business or not? And as I tell my kids, I may like eating at Chipotle. It doesn't mean it's a good stock or bad stock. I got to go the next step then to understand more about the business and all that kind of stuff. So it's not a one size fits all answer to us, but I would say we're generally interested in stuff where we have a view that's a little different than the market, right? We may be seeing the same information, but we have a diverse view from where things are going. So we're long-term though, like I said, so the hot things aren't necessarily of interest to us, but sometimes they are. Like sometimes I think in early stage companies, or if we think there's a huge tailwind behind an entire industry, the regular media could be saying that this thing's way overvalued. And we think, wow, if you look out 5 or 10 years, this thing could be much bigger. So even though it could be 100 times earnings or 200 times, we think, our variant perception is maybe that it could be worth a lot more a long time down the road.
And we also discussed considerations when purchasing real estate in 2022. Let's take a look.
Rents and pricing are actually increasing pretty dramatically. Certainly on the rental side, we're seeing really dramatic jumps in the rental market as more and more people are feeling comfortable coming into New York City. Younger people are starting their jobs, and that's being shown really strongly in the rental market. In addition to the buyer's market, we're also seeing a ton of activity as the trend continues to go upward in terms of the number of sales, and as a result, we're seeing increased raise prices as well. There's definitely a sense of urgency that occurs when the news comes out that the Feds are going to raise rates, which of course has an effect, even if it isn't direct. There is an effect that happens on mortgage rates as a result of this, not only just the raising of rates, but the cancellation or the pulling back of the bond buying that the Fed has been notorious for the past, God, what are we, like 15 years now into this? So yeah, that's obviously going to have an effect on mortgage rates. And so every dollar counts ultimately, and people want to lock in as low a rate as possible before we start to see those effects. When you think about New York City and particularly the Gen Z, I guess millennials are pushing 40 now, so we can't really call those the young whippersnappers anymore.
Younger than me.
Yeah, certainly. Younger than us, definitely. But like as we look into that younger generation that moves to New York City, assumedly they're moving here with prospects or jobs in hand. And they kind of have a clearer vision, certainly than maybe we had when the economy was the state of the economy when we graduated. But they definitely have an idea of kind of where they want to go, and they have a plan of how to get there. And so, and they're also making more money, certainly in New York versus other parts of the country. So they're able to kind of budget a little better as we're seeing like inflation, as we're seeing the effects of more interest rates. They're just able to budget better, and they're just a little bit more savvy about it. They're certainly not looking to get into the market. They're going to try. And I do think that because they do want to kind of take advantage of some of these rates that are there now, but if they don't have, they just don't have enough time to build the assets in order to make that purchase to take advantage now.
Yeah.
Now,
go ahead.
Yeah. Oh, sorry. Yeah. I'm slight tangent. Now, if they are like fortunate enough to have resources like parents and family members who can actually kind of provide some of that seed money, then yes, they are going to take advantage. And I have worked with certain young professionals who are able to do that. But if you're just kind of starting out and you're forging your own path, then you're just going to have to wait. It's kind of a strange marriage, potential marriage anyway, of crypto, which is a very highly volatile currency, and real estate, which is kind of viewed as a very stable asset. However, I do believe that with new development in particular, there's a lot of potential there, especially since a lot of the investors in those types of properties want that privacy, especially if they're coming from other countries where the rules of capital being able to leave the country are very strict. Crypto provides that opportunity for them to maybe skirt some of those rules and still be able to park some capital in New York City real estate. So it ultimately depends on how much the developers themselves trust crypto as a valid currency for accepting from potential investors.
Well, we're halfway through. When we come back, we'll take a look at more of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The Motley Fool helps its members invest and save with expert stock picks aimed at multiplying their net worth over time. As a member, you'll get 2 monthly stock recommendations, access to their best current and historical stocks, tracking of your favorite stocks, articles, reports, and all the expert insights you could ever ask for. The Motley Fool takes the guesswork out of investing, so you can focus on the important things in life. Join now for less than $2 a week.
Welcome back. On Thursday, we discussed what to consider when buying life insurance in 2022. Let's take a look.
Life insurance is nothing more than a replacement for money. It creates money that's needed under a variety of circumstances. So money you may not have, or you may you may have money but don't want to use it for a specific purpose, and therefore you can pay a premium to an insurance company and you can have money paid out in the event of your death. It's just as simple as that. There could be lots of reasons, for individual reasons, why people would consider buying life insurance, particularly as a single individual. Another reason might come to mind that you may not have an immediate need, and we can talk about this perhaps as we further our conversation. You may not have an immediate need for life insurance, but you may have a downstream need, and therefore you might want to guarantee your insurability through purchase of some life insurance today. And we can talk about that a little bit later on. In general, I think insurance sales are up substantially through the pandemic, at least in the past year or so, calendar year. What's also interesting, however, is that claims are way up, way beyond expected claims throughout the industry. I think the last figure I read was something like nearly 35 billion in claims. So wow. That's likely to have a profound effect on insurance pricing going forward. Generally, the insurance company prices its products. Now, wild swings in product changes would be governed by the insurance commissioner. So in other words, if I wanted to market, if I'm a company, I want to markedly increase my rates for whatever reason, I may have to go to the insurance company to get approval to do that, to the insurance commission, excuse me, to get approval to do that. But by and large, insurance companies set their own rates based upon their own experience, the profit that they wish to derive from the sale of their products. What forces companies to be competitive is that there are many, many choices of companies and products out there. So in that respect, the purchaser has a little bit of leverage in terms of which company he or she chooses to purchase insurance from. There are opportunities today to streamline what we call the underwriting process, which is the process you go through to gain approval from the insurance company, at least from a medical perspective. So there are opportunities to facilitate that process. On the other hand, those who have issues, medical issues, are going to be fully underwritten. And the consequence of which is you may or may not get a favorably priced result. So having had COVID in and of itself, I don't think is necessarily a negative marker, but that's just one of many considerations insurance companies will look at in underwriting business.
And we wrapped up this week of shows with discussing questions we need to ask ourselves as we age. Let's take a look.
Preserving our legacy for many people is a way of passing on important aspects of their life to next generations, to whether that's children, grandchildren, nieces, nephews, friends, family, community members. But it's a way of preserving who you are and taking the things that you've learned and experienced and propagating those forward. And for some, that is just as important as safeguarding your physical possessions as you would in a will, or your finances as you would in a trust or an estate plan. There's a great quote by Jane Goodall, and she said that it's our ability to ask questions that make us human. Right. So what is it about questions, fundamentally? And think about what's going on here, just between you and me. You asking me questions, this is connecting us, right? So it's a way that we as humans connect to one another. And by extension, if we ask ourselves questions, it's a way of connecting with ourselves. It's a way of contemplation, self-love, asking yourself a question. It tells somebody that you care about them. If I ask my parents a question about growing up, I'm not just looking for an answer. I'm conveying to them that I give a darn, that I care about that. And so there's a lot of power. And unfortunately, in this kind of this generation of screens, we're moving away from that, right? This intrinsic sense of talking to one another has become substituted with texts and emails, and we don't get that personal connection. So there's so much power here. I'm going to continue this with this idea of questions. There are very different kinds of questions that people can ask one another. I did this exercise a number of years ago where I asked a question a day for 365 days. I have them all on my website, but when I looked at all these questions, I realized that there are really different kinds of questions that we can ask one another. And there's this measure of how personal a question can be. And I think of it this scale. And on one side, you can ask a question like, well, how's the weather? It's a very impersonal question. And, so you can ask that to anyone and they'll just answer that. What time is it? On the other end, you have incredibly personal questions. What is your, do you believe in God? What are your political beliefs? Things like that. And you can't just ask somebody a question like that unless there's a lot of trust and connection already. So that being said, going back to your initial question, which is where do you start? You don't just dive in the deep end, right? You don't start, if you've never done this, by saying, how do you define a good life? What are your beliefs in God? Because that will have the opposite intended effect. If the goal is to learn and to uncover, then you want to start where it's easy to begin. But one of the big things that our kids are doing these days in school are these exercises and homework where they're tasked with interviewing a grandparent, right? So you can ask the question and you have permission to ask these questions at any point in your life. I think the question is, at what point do you begin to process and really understand the answers that you're being given? When I filmed my parents a number of years ago, I did give our children the opportunity to ask some questions to my parents. And the way that my parents answered them were as how they would talk to, at that time, 7 and 10-year-olds, not how they would talk to peers. And I think the beauty of doing these recorded legacies with parents and grandparents is that for people who may not be able to understand those responses today, they can hear what their grandparents or parents are saying years in the future, when they may be able to understand and have greater empathy, to use your word, as to what's being said. When I ask somebody, about their core values, and they talk about doing the right thing, or they talk about, the golden rule, do unto others. The 10-year-old isn't going to understand that, having been there and experienced it, in the same way that an adult who has lived more and experienced more would understand it.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to? Hey, drop us a line. And don't forget, for all the information in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to see our latest content or search our archives? Well, check out our streaming partners, Amazon, Roku, Samsung, and over 100 more. We're back again tomorrow with BRN Sunday. I'll be joined by members of the media, academia, and financial services as we break down the news for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.